Let me tell you about Margaret, a retired school teacher from Ohio. She did everything right. Saved in her 403(b), paid off her mortgage, lived within her means. But now in retirement, rising costs are squeezing her budget. She worries her money won't last, maybe even losing her home. Then one morning, she reads about a new law for 2025, a way for retirees to get significant income tax-free. At first, she's skeptical, but soon realizes it's real. A government-approved change to the tax code. For the first time in years, Margaret feels hope. This isn't just Margaret's story. It's the story of millions of retirees. You've worked hard, saved, and played by the rules. You deserve security, not worry. That's why you need to hear about the Secure Senior Savings Act. This new law could put up to $46,700 of your own money back in your pocket, tax-free. I'll walk you through every step. This isn't complicated financial jargon. This is about your money, your security, your future. The government finally did something right for seniors. It's your responsibility to understand it, claim it, and use it to live the retirement you deserve. Are you ready? Let's get started. What does $46,700 tax-free mean? It means the first $46,700 of certain retirement income in 2025 isn't taxed by the federal government. If you're in the 12% tax bracket, that's over $5,600 in savings. In the 22% bracket, it's over $10,000. This isn't a handout or welfare. It's a tax exemption on money you've earned or saved. The government recognizes retirees are hit hardest by rising costs, so they created a special tax-free threshold. For example, if your retirement income is $60,000, only $13,300 is taxable under this law. That means you can withdraw more from retirement accounts without jumping tax brackets. Your savings last longer. This is a fundamental shift in how retirement income is taxed. It's designed to give you more control and financial freedom. This isn't a minor tweak. It's a major overhaul for retirees. Understand the power of this change. The Secure Senior Savings Act is the key provision of a new law taking effect January 1st, 2025. Its goal, help retirees keep more of their money. Lawmakers agreed seniors on fixed incomes needed real relief. The law creates a special tax deduction, up to $46,700, just for retirees. It combines several smaller deductions into one big, simple exemption. Filing taxes is now easier, and the savings are bigger. Think of it as a supercharged standard deduction for retirees. This exemption applies first to your retirement income sources. The government is fundamentally restructuring how your retirement income is taxed. Treat this as a game changer. How do you qualify? 3 steps. First, you must be at least 65 by December 31st, 2025. For couples, only one spouse needs to be 65. Second, your income must come from qualified retirement sources. Traditional IRAs, 401ks, pensions, annuities, and Social Security. Income from jobs, rental properties, or capital gains doesn't count. Third, you must file Form 1040 SR, the tax return for seniors. Tell your tax preparer you want to claim the Secure Senior Savings Act exemption. Recap: be 65 plus, have qualified retirement income, and file Form 1040 SR. No complicated phase-outs. Just meet these 3 criteria and save thousands. Don't let this opportunity pass you by. It's that simple. Who benefits most? Middle-income retirees, those with $40,000 to $85,000 in annual income from Social Security, pensions, and retirement accounts. For them, this law can wipe out or drastically reduce their federal tax bill. It's life-changing, providing breathing room where there was none. Single retirees, especially women, benefit too. Many will see their tax bill drop to 0. High-income retirees still benefit, but the impact is less dramatic. Those with very low incomes won't see much change, as they already pay little or no tax. This law is for the backbone of America's retirees: teachers, nurses, factory workers, small business owners. It's about letting you keep what you've earned. Know the rules to maximize your benefit. You must be 65 or older. If you turn 65 by December 31st, you qualify for the whole year. For couples, only one spouse needs to meet the age requirement. The $46,700 exemption applies to qualified retirement income, traditional IRA, 401k, 403b, 457 plan distributions, pensions, annuities, and all Social Security benefits. It does not apply to wages, self-employment, regular brokerage interest/dividends, or capital gains. Roth IRA withdrawals are already tax-free and not included. You must file Form 1040-SR and claim the exemption on the new line. Don't assume your software or accountant will do it. Ask specifically. Be proactive and make sure you get your full exemption. It's your money. Take charge. Don't leave money on the table. Avoid these mistakes. First, this exemption is not automatic. You must claim it on Form 1040-SR. If you file the same way as last year, you'll miss out and overpay. Second, don't confuse which income qualifies. Only retirement plan distributions, pensions, and Social Security count. Mixing up sources could lead to IRS audits. Third, remember the $46,700 is a maximum. If your qualified income is less, you can only exempt that amount. You can't carry over unused exemption to future years. Finally, this is a federal law. State taxes may be different. Check your state's rules. Don't assume your income is tax-free at the state level. Be smart. Double-check both federal and state tax rules. Let's see how this works for real people. Meet Carol and David, both 70, living in a state with income tax. In 2025, their household income is $72,000, $24,000 pension, $18,000, Social Security, $30,000 IRA withdrawal. Before the new law, they owed about $4,500 in federal taxes. With the Secure Senior Savings Act, they subtract $46,700 from their income. Their taxable income drops to $25,300. After their standard deduction, their final taxable income is zero. Their federal tax bill goes from $4,500 to zero. That's $4,500 saved. Money for home repairs, medical bills, or travel. This law gives them true financial security. The Secure Senior Savings Act is real, powerful, and here for you in 2025. But you must act to benefit. First, review your age and income sources for 2025. Add up Social Security, pensions, IRAs, and 401ks. If you're over 65 and your income is from these sources, you're likely eligible. Do the math. See how much is shielded by the $46,700 exemption. Next, talk to your tax preparer or research Form 1040-SR for 2025. Don't wait until tax season. Plan now. Stand tall and claim what you've earned. This tax break isn't a gift, it's your right. Use this information to secure the retirement you deserve. Don't let this opportunity slip away. Take control of your money and your future, starting today.